Hey, welcome back. It's Jason Walter here, and here's your latest housing market update. In today's video, I'm going to share the latest news from Realtor.com. They basically post a weekly housing market update, and they actually just released their most recent one today at the time of this video, which is the 14th of July. And in this report here, they're stating that inventory, or the total number of houses for sale right now, is about 30% higher right now compared to 1 year ago. I also have a lot more to share regarding housing affordability and a pullback in home buying demand as well. So with that said, let's go ahead and dive right into this video. And of course, if you guys enjoy this video, then please hit the like button. I greatly appreciate that. And with that said, let's go ahead and dive right in. This is according to Realtor.com. This was just published on the 14th of July. And this is for data for the week ending July 9th, 2022, which of course encompasses the July 4th holiday. It says here we're in the middle of the summer season, historically the peak of home buying activity. We tend to see a peak in home buying activity basically in the early parts of the summer. So basically in June and July tends to be our peak of our housing market. And then the summer months, our housing market tends to plateau because a lot of people go on vacation and put their plans on hold to either buy or sell a house. However, this summer we have high home prices, couple that with, of course, 40-year highs for inflation, and of course, mortgage rates, which have pushed monthly housing payments 50% higher compared to 1 year ago. And because inflation is basically at a 40-year high, people are paying more for cars, clothing, food, gasoline, and other services. Therefore, they have fewer dollars left over after each paycheck. And with the cost of housing rising by double digits, of course, we have a growing housing affordability crisis in America right now. And because of this, Realtor.com is reporting that housing affordability is at its lowest level in their data series, which their data series actually goes back to 2016. However, though, as I report to you guys, Black Knight recently reported that housing affordability is at its lowest levels ever since they started tracking data way back 35 years ago. So check this out. According to Realtor.com, for a household earning a $75,000 income, only 23% of houses on the market are affordable. In other words, about 23% of houses that are currently listed for sale are deemed affordable for a household earning a $75,000 income. In comparison, in 2018, the same household could have afforded over 50% of houses listed for sale. Now it's only 23%. And this affordability issue is felt across most income ranges because households earning about $200,000 per year can afford 74% of the houses listed for sale as of June 2022, compared with 87% back in June of 2018. So when you click on this link right here, it takes you to their affordability score. I actually have not seen this. This is the first time I've seen this as of today, actually. So they have what's called an affordability score, which right now it's 0.62 across the United States right now. So 0.29 is deemed less affordable, and more affordable, or the most affordable, is basically 1.12. So on a national level, the affordability is at 0.62 in the least affordable range. But they actually break it down by region across the United States. And I'm going to be sharing some areas here very briefly, and then we'll go back to this report from Realtor.com. So the least affordable area by Realtor.com is actually in San Diego and Carlsbad. Carlsbad's very close to San Diego. Their affordability score is only 0.29. Again, the national average is 0.62. And also in Los Angeles, 0.31, Ventura, which is Oxnard as well, 0.37. And in Sacramento, where I live and work as a real estate agent, including Roseville, which is about half an hour away from Sacramento, it's 0.50, so less than the US national average. San Francisco is at 0.52. Also Austin, Texas at 0.41, so less affordable than San Francisco. And I believe that's because incomes in San Francisco are much, much higher than in Austin, Texas, for example. In stark contrast, here are a couple areas that are much more affordable than the national averages. That'd be Toledo, Ohio, where their affordability score is 1.1. Also, the most affordable area, according to Realtor.com, is actually in Youngstown and Warren, which is located in Ohio and also in Pennsylvania. Obviously, there's a lot more cities here in this report here, and I can't go over every city here because this video would be 3 hours long. Instead, I'll try to leave a link below in the description of the video. And in going back to this original report from Realtor.com, it says we're moving towards a rebalancing of market conditions. Of course, borrowing costs continues to rise, and that's dampening home buying demand. Also, we're seeing more houses for sale, and home prices will continue to adjust to a new equilibrium. I actually kind of laughed when I read this last statement here that prices are going to continue to adjust. In my personal opinion, the areas that have the biggest increases of housing supply and also the biggest increases of price reductions, those markets are at the biggest risk of home prices decreasing over the next 12 months. So I think that, of course, every housing market is different. There's going to be some areas where home prices are going to be decreasing and other areas where home prices are going to be plateauing. So we'll have to see what happens, and I'll definitely keep you posted. Okay, changing gears slightly, let's talk about home prices across the nation. So the median listing price, again, this is the asking price when a home seller lists their house for sale. That's a listing price. The median listing price advanced 15.9% over last year. And no big surprises here. That's the 30th consecutive week where we had double-digit yearly home price gains in the U.S. However, though, listing price growth is on a downward trend, moving below the pace we've seen in late May and also in early June. So in other words, home prices are not increasing at the same rates we once had back in the early parts of this year. And with a softening of home buying demand and rising housing supply, home price growth is going to continue to ease. And also it will continue to slow in the second half of 2022. And therefore, because of this moderation in home price growth, and of course we're having more houses listed for sale, the outlook for buyers is that it's starting to look more promising. So obviously it's a step in the right direction that we're starting to see a slowdown in home price growth that basically started in late May and also in early June. So also want to share the latest trends regarding home prices according to altosresearch.com. They have a really good YouTube channel if you guys want to check that out. They provide weekly housing market updates, if not more often than that, regarding our housing market across the United States. Again, that's altosresearch.com that I'm getting this information for you guys. So here's the median listing price across the nation ever since the start of this year. So take a look at this because as Realtor.com is stating, home price growth has basically been stabilizing ever since late May. And coincidentally, in May was when the average 30-year fixed rate mortgage surpassed 5% for the first time in many, many years. So the dotted line right here is a 7-day average, and the darker line here, or the solid line, is a 90-day average. I track the 7-day average on their website here. And as you guys can see, home prices increased greatly, especially in the last half of March and also into April. But once we hit late May, look at that. The median listing price was $449,000. And the most recent stats we have right now is $450,000. So home prices have basically been flat, or the asking prices have basically been flat ever since late May of this year. And what we're also seeing right now is an increase of housing inventory. So according to altosresearch.com, the total number of houses for sale, which is housing inventory, is basically just over 490,000 houses. Compare that to 1 year ago in July, early July 2021, we had approximately 372,000 houses for sale. So by my dumb math, that's a 31% increase in housing supply compared to 1 year ago, which is basically in line with Realtor.com as well. And because inventory has been increasing greatly ever since basically May of this year, we're starting to see more price reductions. So Altos Research is also reporting that the share of price reductions right now in the US is at 31.7%. This is pretty astonishing because 1 year ago, take a look at this. 1 year ago, it was only 21%. So in 1 year, we basically went from 21% all the way up to 30% or almost 32% right now. Also in the middle of March, the share of price drops was less than 17%. So a big increase from 17% now all the way up to 32%. In addition, current levels right now at 32% is also higher than 2 years ago in July 10th, 2020, when the share was basically 25%. And back pre-COVID in July 2019, the share was 34%. All right, changing gears slightly, let's go back to this original report from Realtor.com. So new listings, which of course is a measure of sellers putting their houses up for sale, actually declined by 6% from 1 year ago. No big surprises regarding this because it's fairly uncommon for people to list their houses for sale during a holiday week. So this week here is for the week ending July 9th, which encompasses the 4th of July holiday. A lot of people don't want to put their houses up for sale during the holiday period. And therefore, for this week ending July 9th, the number of new listings is actually down 6% from the same week 1 year ago. In the previous week, we had an 8% gain compared to a year ago. And according to Realtor.com, active inventory is up 28% above 1 year ago, and houses are spending longer on the market. In other words, they're taking longer to sell, and that's contributing to the boost in houses for sale right now. So right now we have 28% more houses listed for sale compared to the same week 1 year ago. However, take a look at this because I have some notes here regarding the increase of housing inventory this year. So year to date, we have an increase by 51% of active listings compared to January 1st of this year. Also, compared to the past 4 months, housing supply has increased 65%. So one thing I want to mention regarding this is that I'm not too sure what they mean regarding year-to-date 2022, where active listings are down 7%. Doesn't really make a whole lot of sense to me because if you actually look onto Fred's website here, or Uncle Fred's website, the source here is Realtor.com. As of January 2022, we had 409,000 houses for sale. And as of the end of June, we had 619,000 houses for sale. So by my dumb math here, let me take a look here, which is right here. So January, 409,000 houses for sale basically. And then June 2022, 619,000. That's a gain of 210,000 houses for sale year to date. And that's a 51% increase in the number of active listings from January to June of this year, basically. So I'm not too sure what they mean by a decrease of 7% year to date in 2022, but I'm going to be emailing Realtor.com to get some clarity regarding this. If I miss anything, guys, please leave me a comment below. This is because I really don't understand why they're saying that year to date active listings are down 7%, when clearly when you look at January to June at least, we're up 51% year to date. In any case, going back to this report here, days on the market has also been slowing as well. This is a time period when a home gets listed for sale until when the home seller accepts an offer. That's days on the market. And days on the market is tracked, or it's basically tracked in when the house has actually closed escrow, or the house actually has been sold. So days on the market is only 1 day faster than the same time period 1 year ago. But looking back 2 weeks for the week ending June 25th, houses were selling 3 days faster compared to 1 year ago. And they say here that it says here the pace of transactions is moderating noticeably as high home prices and of course high mortgage rates are taking a toll on home buying demand. At this rate, houses will start lingering longer. In other words, it's taking longer for a house to sell, and therefore homeowners will have to contend with more offer contingencies and return to negotiations, which of course is a step in the right direction because it's been such a strong seller's market for a very long period of time. And I'm very much looking forward to the day that home buyers have more leverage in this housing market, which has been dominated by a strong seller's market for so many years. With that said, thank you so much for watching today's video. If you got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.